They're like the number one in the world gold consumers, and of course their economy has not been doing well, so they have been buying huge volumes of gold. They also impose a 2% increase the duty on gold by 2%, making it harder for the Indians. In India, owning and keeping gold is very, very important. It's the family's wealth. And they buy gold ornaments, gold everything, and they keep it. It doesn't go back on the markets. So there's lots of personal holdings of gold. Not for investments, it's just done. So they are one of the largest users and importers of gold, besides what they use and make and export. So their economy's been way down, so they haven't been importing anywhere near what they should have or thought they would be. So the consumption of gold has gone down. The second point is this recently the Indian government, to help cover a budget shortfall, increased the duty tax on gold by 2%. So another reason gold is not being imported as much. But gold is the second part of gold is considered a safe haven. Gold is one of those assets you can own, hold, put in a closet, put in your safe, put in a drawer and save for a rainy day. You know it's not going to ever lose all of its value. And it moves up and down with the markets, but you know it's something you can hold. It's like diamonds. People can hold them and have their value, and they're easy liquidity to trade. You can go anywhere and trade in gold for cash, whatever country you are, wherever you are. It's the psychological point of that. Countries hold gold. It's a matter of wealth, okay? But it's also a safe haven. It's where traders who have huge amounts of dollars or huge amounts of liquidity, who have to have this liquidity at work, they have to have, and it has to be in some form. If it can't be sitting in a bank in England, because then it's sitting in pounds. If the pound's going down, your value is going down. If you're sitting in a bank in Canada and the Canadian dollar is going down, it's going down. So it moves around the world based on interest rates and safety. So when the world is very unsafe and unsecure and there's lots of worrisome, people move into what's called safe havens. Gold has always been considered the number one safe haven. The second is the U.S. dollar has always been considered the safest place to keep your currency. Fortunately, we're paying no interest, so to have your money in dollars but earn no interest is a problem. That's why when the FOMC came out 2 weeks ago and said the interest rates in the U.S. will remain close to zero for the next year and a half, the dollar fell instantly. But we know that the U.S. isn't going to go broke. It's not going to default. Its currencies aren't going to be devalued. Its political system is not going to collapse. Okay. Gold, on the other hand, doesn't matter about political systems, devaluation, or anything else. It's an asset. If you want to hold it, you can hold it. Okay. So when worries go on in the world and the dollar is falling, people run to gold. When the dollar is going up, people take their money out of gold and put it into dollars. That's an old adage and it's an old standard. The second part is when people have more risk appetite and they're willing to invest in, whether it's other currencies, whether it's in other vehicles. I mean, there's so many vehicles that they can put their money into that they stop looking at metals. When they run the high, they look at metal. Gold, platinum, silver. But on the overall, it's gold. So right now, the U.S. dollar has been relatively strong. U.S. markets are very strong. Economic data in the U.S. is pretty solid. There's been some inklings from Ben Bernanke and also some other members of the Federal Reserve that this projection into 2014 was said, but it doesn't necessarily have to hold true. It's not policy. It's a projection. So there's been some undercurrents that we could eventually see a raise in the rates if the U.S. economy keeps growing. The euro has been steadily dropping because of huge worries in Greece. So as the euro goes down, worries escalate in Greece, the dollar goes up in value. People move their money into dollars, gold comes down. So we've been seeing gold fall. Okay. This all being said, how do we make money with this? Trading in binary options. Okay. Okay, let's see. I got some comments from Joyce on Canada. Canada building permits says a good gauge for currency and expect a positive report. Increase in that is good for business, of course. In Canada, if the report comes in, building reports are a supportive instrument. When building permits come in and say that they're increased, that means that people are buying or interested in housing or more construction. Means if they're applying for building permits, it's creating jobs, is using commodities and raw materials, and eventually be paying taxes. So it's a start of showing economic growth. Okay, let's real quickly take a look at what's happening with the Canadian dollar and see if anything is happening. The report will be out in a minute. Here we go. Well, look at what we see is happening here. The U.S. dollar, Canadian dollar has fallen. Okay. The markets are predicting that the Canadian dollar is falling against the Canadian dollar. The market is picking up, and they're all holding tight at that 99.750, waiting for that report. So this would be a good time to go over to our economic calendar, and what you're going to see is we're waiting for that detail to pop up on our calendar. Okay, as soon as it's released, it will come up on that calendar. Now, you could sit here waiting for a trade, or we can now say, well, look, it's fallen down all day today. We're not sure that report, and the economy is not doing that well. Look what's happened. It's dropping back down a little bit. 99.750 down to 99.25. They're all sitting waiting for the report. Okay, so the report was probably pretty strong because the dollar is losing value. But you see how it's moving down, down, down? Okay, Joyce says they're speaking now. So, as it's dropping in value, it's pushing down way too far, too fast. Okay, so to trade binary options, this would not be if you're trading the U.S. dollar Canadian in the foreign exchange, or if you were trading in actual currency. But I would take a call relatively quickly, because what's going to happen is it's going to drop too fast, and when it hits quickly to the bottom, it's going to bounce back up. And we took this at 1400, which is 2 o'clock today. So that's 30 minutes now. It's going to have the 30 minutes to recover and bounce back up. So all we have to do is end up higher than 99.760, 706. We don't care whether it ends up, the day down. We don't care where it is. We just care what it's going to do in the next the next expiry time, which is the next half hour. It's continuing to drop. And Joyce, can you update us? What did the actual report say? I'm waiting for Joyce to type an answer for us. She did. Okay, Rupner, you wrote in 11.1. What are you saying? The actual is 11.1, but what was the forecast? What's important is the comparison between the actual and the forecast, not what it actually. What you want to see if the markets had forecasted properly, there's nothing going to happen. It's only when the markets have forecasted incorrectly that something's going to happen. And something here has drastically happened. If you're all watching with me, you're seeing that it is continually, the U.S. dollar against Canadian is continually dropping ever since the report or the data came out. It's dropped since we started this conversation. It's dropped from 99. we got into it at 99,706 and is now 99.6. It's dropped 54 pips. Does anybody, okay. Now we see it turn up ever so slightly because we are trading, again, remember we're trading in small increments of time in small amounts of money. But all we have to know is we risked $100, and as long as we come out in the money, we're going to make $170. The most we're going to lose is $10 because is $90 because we have protection rate of $10. Do you see that in the bar across the top? So we can actually click on that and open up another chart where it's actually showing, it's the same thing as below, but it's going to show us, well, since we entered the trade, what has the market done? It's gone straight down and now is starting to bounce back up. It's starting to recover from what happened. So while this is going on, this is going to be going on for the next 15 or 20 minutes. Let's go back over to gold. But this is, okay, this was a trade we did real quickly offhand. Okay. If you had known ahead of time that the BOC was going to come out with this report, you could have looked at the forecast. You would have then set your rules of the trade, which is what you're supposed to do ahead of time, and said, if this forecast comes out over this amount or under that amount, I will enter the market at this number, and I will sell. I will buy at this number. And you would have done your proper evaluations, because this is what happens when the reports come out over or under. Okay, I'm going to give you a quick example. We're going to go look at my portfolio for a second. Now, believe me, this isn't real money. This is a demo account that they give me to trade with so that I could do stuff for class. I wish it was my money. But we're going to take a look at trades that were made. We just want to look at 2-3. Okay. Last Friday, when the U.S. unemployment reports came out, it's similar to this report. It came out way beyond forecast. So in a matter of from 1330 to 1404, I was able to enter 1, 2, 3, 4, 5 trades. I invested $2,000, $3,000, $4,000, $5,000, $6,500, and I reaped back 35, 55, 61, 71, 71, and 8 is 79, 89, 96, 10, 6, 11, 3. So I made $3,300 in a matter of 25 minutes, simply trading the market response to the reports. So let's go back real quickly. We're back over at gold. I'm going to go back one more time and look at the Canadian dollar and see what it's doing over there, and then we're going to go back and see what we can do in a trade in gold before we go for the day. Now we've also added a new feature to the site. I can't show it to you here because for some reason I have something on my computer that's blocking it. But you see where my arrow's pointing new? That's called Trade from the Charts. It allows you, it brings up a much larger chart that's done complete, same information, but done with a black background, and you can actually make your trade right on the chart and then watch it right while you're from the charts. For some reason I'm using Chrome Beta, which is the newest version of Chrome being out for a test market, and this, for some reason, with this version of Google Chrome, it's not working right yet because it's in a beta test mode. But if you're on any other version of Google or you're using Firefox, it works great with Firefox. You can try it. We also have a new feature that's only up right now on the Euro-US dollar, and it's called Buy Me Out. What Buy Me Out does, it allows you to sell out your position in the middle of in the interim between the time you've opened the position and the expiry time. So if the position is not going in your favor, you can cut your losses and get out. Or if it's gone in your favor but moved too fast up and is falling down or going the opposite way, and you feel like you're going to miss, the market's not doing what you thought it was going to do at that moment, you can get out of the market and minimize your risk. So in other words, if you put in $100, you can actually get out of the market at $97 and walk away only losing $3. It allows you to sell your position at any given time you want. And we're eventually going to be adding that to all the assets that are available. It's in a shakedown mode now. It just got launched this week, and we'll be offering that to everybody. So we offer you 3 risk management tools. One's called Rollover.